Bill Miller described holding Bitcoin as insurance against a financial calamity, and he disclosed he still holds a chunky position in the leading cryptocurrency because it is still in its early days. Crypto now represent 50% of his personal assets, he revealed in a video interview with WealthTrack. Miller, who gained fame for beating the S&P 500 index for a record-breaking 15 years in a row from 1991 to 2005 as a fund manager at Legg Mason, has previously invested heavily in Bitcoin in funds that he managed, but his revelation about his personal portfolio was new. Now it's less than that, because it's down in half since November, he said. It's still a very big position, he added, but didn't reveal any figures. The overall cryptocurrency market had a rough January as appetite for risk assets fell. Against a backdrop of persistently high inflation, the Federal Reserve's increasingly hawkish stance, and rising geopolitical tensions between major world powers. Miller, a former chairman of Legg Mason Capital Management Value Trust, also called KPMG Canada's recent Bitcoin and Ether allocations to its balance sheet a bullish move for crypto, since the accounting firm is engaged with several types of companies. I think you're going to see a lot of adoption among foundations and endowments and institutions this year, and that's going to continue, he said. The legendary investor said the notion that Bitcoin holds no intrinsic value is correct, and compared the digital asset to high-value collectibles such as a Honus Wagner baseball card or a Picasso painting. It's like an insurance policy, the chairman and chief investment officer of Miller Value Partners told CNBC in a Wednesday interview. Insurance policies have no intrinsic value. In fact, you want them to have no intrinsic value. You don't want to have your house burned down or get in a terrible accident, but you pay for insurance every year in case that happens. Bitcoin is insurance against financial catastrophe as we see in Lebanon, or in Afghanistan, or many of these other countries where we saw that around the time of the pandemic. Miller said he personally started buying Bitcoin at around $200 in 2014 after hearing a talk by Wences Casares, known as the patient zero of Bitcoin for introducing it to Silicon Valley circles, at the annual Sun Valley Media and Tech Conference. He bought some more Bitcoin over time, but then didn't buy it for years, until last year when the price hit new highs, and then started to fall sharply, and he thought it was a good time to buy the dip. Miller started buying again at $30,000, down from its high of just under $69,000, reasoning that there were a lot more people using it, not to mention that venture capitalists and others were investing in it. Miller noted that a part of his personal Bitcoin investments was in companies tied closely to its price, such as Bitcoin miner Stronghold digital and software company MicroStrategy, which holds billions of dollars worth of Bitcoin on its balance sheet. Miller said he thinks Bitcoin is best thought of as digital gold with a strictly limited supply, and that he's only recently allowed himself to be called a Bitcoin bull rather than just a Bitcoin observer because he feels that it's now developed into a game-changing technology. Despite his own heavily concentrated position, Miller's advice for average investors is to put 1% of their net worth in Bitcoin, reasoning that if you put 1% of your portfolio in it for diversification, even if it goes to zero, which I think is highly improbable, but of course possible, you can always afford to lose 1%. His main rationale for that advice is that Bitcoin represents a unique investment. I think the average investor should ask himself or herself, what do you have in your portfolio that has that kind of track record? Number 1, is very, very underpenetrated, can provide a service of insurance against financial catastrophe that no one else can provide and can go up 10 times or 50 times. The answer is nothing. Meanwhile, despite how well Miller's personal investments have performed, his funds have not done anywhere near as well. Miller Opportunity Trust, the $2.2 billion fund that he's the co-manager of, fell about 3% in 2021 compared to a roughly 27% gain for the S&P 500. According to Cointelegraph, amid Bitcoin posting a significant price recovery since early February, JPMorgan analysts suggested that the fair value of Bitcoin is actually lower than its market price on Tuesday. The current fair value level for Bitcoin is around $38,000, JPMorgan strategists said in the bank's latest investor note published on Tuesday. Led by JPMorgan crypto market analyst Nikolaos Panagurtsoglou, the strategists estimated the fair value based on Bitcoin being nearly 4 times as volatile as gold. The fair value of Bitcoin would rise to $50,000 in a scenario where the volatility level narrows to 3 times, the strategists suggested, adding, "The biggest challenge for Bitcoin going forward is its volatility and the boom and bust cycles that hinder further institutional adoption." While being bearish on Bitcoin's current fair value, JPMorgan strategists still forecast that Bitcoin will surge far above $100,000 one day. According to the report, Panagurtsoglou's long-term theoretical target for Bitcoin stands at $150,000, up from $146,000 forecasted in January 2021. JPMorgan's analysts also noted that Bitcoin's price correction in January looks less like a capitulation than the one recorded in May 2021, when Bitcoin plummeted 50% from above $60,000 to around $33,000. However, some Bitcoin metrics, such as futures open interest and reserves on exchanges, are pointing to a more long-standing, and thus more worrisome position reduction trend that began in November, the strategists reportedly added. The strategists previously released a similar report in November, asserting that Bitcoin's fair value was around $35,000, or about 45% lower than its market price of $63,281.